Hey traders, welcome back. So we're talking about what is the safest way to trade. There's no safe way to trade. We know that. We know there's always risk in the market, whatever we do. That's the whole point of speculation. You take risk and you expect to get rewarded for taking that risk. But there are ways that we can, little things that we can do to kind of reduce the risk down a bit. We talked about in the previous video, this is the second part of a two-part video series. We talked about the market you're trading. If you're trading tech stocks, be careful, they can move 10% plus in a day. Your strategy, we talked about trading pair trading strategies, market neutral strategies that are hedged, which are going to be less volatile than trading outright direction. And then overnight risk, a big one, being careful you're not getting caught in overnight gaps. Now the big one out of all of these, and you can trade the most risky stock, the most risky strategy, take the biggest overnight risk you dare, is size. The size of your position. You can dampen down the risk on all of these things purely by trading a small size. Now, I know the job of a trader and what we all want to do is to make as much money as possible for as little risk as possible. That is the name of the game. But you can't make money if you're wiped out, if you've lost all your money in your account. So being careful and being cautious with size. Too many times, sadly, you see articles in the paper, there was one recently, people losing a significant amount of money, and generally speaking, they're losing significant amount of money. They go through the talk about it was this and that and the other, but when you look at the position size, it was far, far, far too much. You know, if you're trading £100 a point in a spread on a currency pair, and that currency pair is moving 100 points in a day, you've got to be able to stomach that sort of move. Even if you're scalping for 10 points here and there, you're looking to make a grand here and there, you've got to expect that any one time that thing could just spike 50 points in one direction. And so as long as you're comfortable with that risk, then fine. But if you're not, that needs to be way less than that, even going down to £1 a point, or even less if you're just starting out. But you make it relative to what you're trying to achieve. And okay, we're all trying to achieve large profits, but you're not going to get large profits if you've wiped out your account. So dialing down the risk with size. If you're trading a small size, then you can trade any of these risky things that we've talked about, you know, biotechs, techs, you can take overnight risk. But it's also always thinking about, when you take the trade, where is the risk in this trade? If you just take a few moments to think about this, if you're going to trade it, hold it overnight, what are the chances of this thing going crazy overnight? Where could it go if we have some adverse news? What's the worst case scenario? Put your own stress test on your portfolio, your positions. If someone comes out and says this on the euro over the weekend and I'm holding a euro US dollar, what's going to happen? Is there a meeting scheduled with some of the European countries that could cause this to gap? Start to look at it. Like the Swiss debacle we had, everyone's buying it and they pulled the floor. Now, where could it go if we pulled the floor? Yes, you may not appreciate the full extent of it, but at least you're accepting it. And if it starts you from going from £100 a point down to £1 a point and dialing that risk down a little bit, then that's only a good thing. And the other thing is, you know, not being too eager to dial up that size unnecessarily. So this whole thing, as I was saying again, this whole risk, the safest way to trade is by doing small size. Yeah, and even then, even if you're experienced and you're moving on, you're making a lot of profits, even then, decreasing your size, keeping it small, as you get more confident, as you get more comfortable, you will want to take on more risk to generate more reward and more potential reward. But if you've got in the habit of making sure, hey, I'm trading the strategy that's not so risky, or is risky, I need to dial down the size, it's not so risky, I can increase my size, I'm not holding overnight, I can day trade this, I can increase my size because I haven't got any overnight risk, whatever. But the safest way is to just trade with small size and then increase it slowly as you become more comfortable with the risk and as you accept where the risk can come from, because risk can come from everywhere. News, it can come from risk with the platform going down, risk with the broker, the exchange going down, you know, macro news, global news, any of this stuff can affect what you're trading. So being aware of that, looking where the whole potential risk in the deal is, then deciding to take it, accepting it, and not being afraid or not being worried, because whatever happens, you're not going to get completely wiped out because your size is acceptable for the account size you've got and, of course, the money that you're prepared to risk in trading. So hope it helps, guys. If you've got any other ideas of how you make trading safer, any other strategies you can think of, any other things here that I've mentioned that you don't agree with or do agree with, stick a little comment in this comment section below and read it, and I'll be interested to hear your thoughts on it. If you like this kind of video, give it a thumbs up. Don't forget to subscribe, and I'll see you soon with another video. Take care, guys.